Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about how I'm playing with some insurance puts on the iShares Russell 2000 ETF under the ticker symbol IWM. So this is utilizing an options trading strategy to say that indices such as the iShares Russell 2000 ETF is going to be going down. The logic behind that is essentially I think that there's a number of stocks that are in the indices that are up significantly on news not related to the underlying fundamentals, as well as they will be going through a rebalancing this Friday with more companies that are up on news that are not necessarily tied to actual historical performance. For that reason, I think that there's the potential that the stock has the capability to continue to go down, or the ETF has the capability to go down, considering that they are back where they have been, kind of at the all-time highs region. So for that reason, this is all purely my opinion and just something that I'm doing to look at having some insurance in case the market does decline, and by no means should it be taken as financial advice. If you do like some of the conversation today, I do have a Discord where I outline the trade that I made today, and that can be found in the description down below, where we talk about stocks on a daily basis, as well as you can sign up for my newsletter where I talk about macroeconomic analysis as well as stock price movements. That is free and also down below. If you find this content helpful, please consider leaving a like and subscribe, also free, and it really helps this video get out there and help people. So if we look at what exactly is the iShares Russell 2000, the Russell 2000 is really 2,000 companies across the US stock market that has a lot of volume, has positive earnings in some cases, but really I like to look at this as a huge blend of small caps in the market. And what you're capable of seeing here as we kind of showcase this is that there is a lot of volatility in this indices right now. Now, this is a fund that does charge a expense ratio, and you can see that right here of it's very, very low, less than 20 basis points, coming in at 19 basis points, and it does pay a dividend right at 1%. This has had a huge run up over the past year. You can see going from the COVID timeline of below 150 all the way up to where it closed today at 228. So why do I think that there is risk in this portfolio? Well, if you look what actually makes up the stocks in the company, you can see that the PE ratio for an entire portfolio is north of 20, which is a huge factor because that's a really high PE ratio for an entire book of stocks, especially compared to where this has been historically. The other half of that I would highlight is you can see that the price to sales ratio, this means that a lot of these companies are trading at higher values than what they're actually outselling. Now, because of the way that this is weighted, that doesn't necessarily mean that every single company in here is doing so, but there is going to be a number that is. So some of the key names that are in here, and this is just showcasing by percentage of total assets. Just looking at the numbers up here, we've seen a huge decline in Penn National Gaming. That is notably due to the fact that we saw a lot of weakness in DraftKings stock and the gaming gambling sector in general. So I want to highlight that that is a key area that has weakness right now. But could that trend lower if the market were to go lower? Yes, 100%. Some of the other key names in here that I know the broader group will recognize is going to include GameStop, which again we've seen just an incredible run this calendar year, as well as AMC, which is still ongoing with the run that they're making. Again, starting with a low this calendar year, at that chart says right there, $1.98, as well as a high this year, $62.55, and they're rapidly approaching that high again. So regardless of how you're approaching the idea of this short squeeze that continues to pervade the approach right here, what I see on this chart is a lot of companies that are up hundreds of percentages. Or even in the case of someone like Novavax, where there's this positive reasoning behind why they're up, they're still up 62%. RH is up 52%. You can see some of these other companies such as Plug. I think Plug is incredibly overvalued. They announced earnings today and went up 11%. So this was a company that is still down from where they were in January. But they went they went up this morning 11%, even though they missed their earnings estimates on both the top and the bottom line. So some of the things that I expect to see, we've got more companies that are joining this Friday in Atossa Therapeutics, Clover Health, Bionano Genomics, just to name a few. Another few that I would highlight is something like Arcimoto, which is FUV. More companies that are not actually growing in value and growing in profitability. So I think that it's important to note all of that stuff, because at the end of the day, they're not making any money. So I'm not looking here for a flash crash where I think that the company is going to go from the ETF is going to go from 230 all the way down to 150 again. What I'm looking for is I'm looking at the 220 puts right now at the mid to end July. The play that I made today was mid-July, where I'm looking to see, is this capable of going down to 220 to 215? So you can see that that is not a far move, but it does give me some downside exposure if they do drop down to 210 to 200, which again was where we were at the beginning of this year. That's not a huge decrease. So this is what I'm looking at. There are a lot of moving parts to this indices, but you can see that the index, we've topped out quite a few times around this area, and I don't see a further breakout coming for a lot of companies that aren't necessarily doing better earnings. So for that reason, this is why I am looking to go short in this investment thesis. So if you have any feedback, please let me know down in the comments below. I'd love to hear it, and if you found this content helpful, please leave a like and subscribe. Thanks. Talk to you later.